Hi everyone and welcome to April Structured Products Update. I'm here with a quick overview of key trends and highlights across the global structured products market. Let's start with Canada. The market cooled a bit in April with issuance up just below 7% year on year. That's a slowdown from March, bringing the growth to 37%, down from 42%. Reasons behind it, the rollover speed is for the second month in a row are quite low, suggesting that investors are cautious, and of course there is not much volumes coming back to the market. We also saw a shift in underlying preferences. Canadian banks are gaining momentum, overtaking utilities as the preferred underlying. That's a notable change both on the issuer side as well as on the investors. Now, turning to the US, activity also slowed down. Growth was just 2% compared with last year, and year to date the market growth slowed down to 14%. On the issuer side, highlight to Jefferies, who is climbing significantly in the league table, while Morgan Stanley, RBC, and Citi also had solid months. In contrast, both and Barclays saw a weaker performance. On the buy side, JP Morgan Securities is gaining traction, though from a small base. And distributors that rely heavily on rollovers felt the impact from the slower pace. Now, we're also seeing an uptick in interest in QI strategy, especially the ones using futures. While still a very niche part of the market, the growth is accelerating. Interesting enough, demand remains very strong for European exposure, especially using the Euro Stoxx 50, and Morgan Stanley led with the largest trade of the year so far. In Europe, we see a 15% drop in investment products, largely driven by low rollover activity. On the positive side, rate-linked products gaining market share, and we're seeing growth interest in capital protected structures. Innovation is clear focus. There's some tweaks on the payoffs with look-backs, agent options to manage volatility. On the underlying, less preference for the Euro Stoxx 50 on its own and more combinations with Euro Stoxx 50, S&P and SMI, as correlations between these markets have weakened since the liberation date. Also on the fixed side, it's important not to forget that there's been a shift towards variable rates instead of fixed, reflecting a potential increase of rates in the future. Anyway, hope you liked it, and yeah, see you soon.